Ray Dalio is the founder of the world's biggest hedge fund, Bridgewater Associates, and he's worth 18.7 billion. 18.7 billion. Do you know how you would spend it if you had it? If you don't, you can ask Ray Dalio because he actually has that much. But if you do get a chance to talk to him, perhaps the most important question is, how did he make 18.7 billion? And how is he growing it? It is highly unlikely he'll give you the detailed strategy. The Billionaire Club is elite for a reason. He does, however, drop hints every now and then. And for several years now, like other billionaires, he's been investing in gold. Just a little over half a year ago, Dalio said that too many other asset types are plagued by low returns. On the other hand, gold performs well when currency is depreciating and when domestic and international conflicts are flaring up. In case you haven't noticed, we're in the middle of a domestic and international conflict of titanic proportions. From the Federal Reserve to the trade war, there's no shortage of risks for the US stock market. Now, stocks are showing signs of recovery. Despite this, world's billionaires, including Dalio, are advising investors to put their cash in a different asset. Gold tops the list because of its stability regardless of the currencies and the S&P. The recent years also witnessed the quick expansion of gold's industrial uses that's boosting its industrial value. Ray Dalio's Bridgewater Associates predicts the gold price could climb 30%, well over $2,000 an ounce. Bank of America recently went further and predicted that gold will hit $3,000 an ounce in the next 18 months. Bridgewater Associates co-chief investment officer Greg Jensen, also a billionaire, laid out his case for why the gold price can jump to a record high. He identified three primary catalysts for the impending gold price rally. Number one, a permanent shift in the Federal Reserve policy. After the Federal Reserve cut interest rates 3 times in 2019, investors assumed that the bank would seek to normalize rates as soon as it was clear that the economy was on stable footing. But Jensen predicted the Fed and other central banks will hold interest rates low even if inflation begins to exceed stated targets. Whether or not Jensen saw the pandemic happening when he made this statement is not clear, but his prediction came absolutely true. Jensen said, "There will no longer be an attempt by any of the developed world major central banks to normalize interest rates." That's a big deal. Other analysts are also concerned about the Federal Reserve's intervention in the repo market. Investors could have lost their confidence in the financial system, causing them to cash out all of their profit. Is there anything the global financial crisis taught us? Is that a perceived weakness affecting an important financial institution could easily turn into an economic crisis. Bridgewater suggests investors should buy gold to defend their portfolios against the weakening US dollar. Number 2, boiling conflict in China. The US and China signed a trade agreement that was supposed to benefit both the US and China. Before the pandemic, analysts think that all of it did was just put the conflict on hold. The pandemic seems to have restarted tension. Historically, any political conflict casts doubt on investors. Just look at how the gold price rallied in the aftermath of Ron Soleimani's death, as investors flee from risky investments. Now, the tension with China is re-escalating. Investors are pulling out, causing the instability of the S&P and the dollar. Gold is the only investment that increases in value during political and social unrest. Number 3, political turmoil in the United States. Last quarter of 2019, Bridgewater reportedly placed a $1.5 billion options bet that the stock market would plunge by March of 2020. And it wasn't because of the pandemic. It was because of the probable political unrest. By March of 2020, the outcome of the Democratic primary would have been clear. That would have sent investors into a point of uncertainty, and it did. And the pandemic just magnified it. It means one thing: with or without the pandemic, the political turmoil would have happened anyway. Dalio further explained that the growth of the US economy was reaching a standstill, unable to sustain the uphill battle it started 3 years ago. This is the root cause of the recession and inflation. The pandemic only boosted the economic crisis. All these economic problems we're experiencing are, in fact, inevitable, with or without the pandemic. Although the pandemic is adding urgency to the need to rethink our investment strategy, we should do it regardless. Investors should look into safe haven investments. ones that are tangible and politically agnostic like gold. Gold is the only real global currency, one no one can control or overprint. That's what billionaires like Ray Dalio are doing. You should follow the money. Ray Dalio says, investors have been pushed into stocks and other assets that have equity-like returns. As a result, too many people are holding these types of securities and likely to face diminishing returns. Most investors are underweighted in such assets, meaning that if they just wanted to have a better balanced portfolio to reduce risk, they would have this type of asset. For this reason, I believe that it would be both risk reducing and return enhancing to consider adding gold to one's portfolio. If Ray Dalio is doing it, it's something that you may want to consider. And if you want to learn more how to invest in gold safely, check out noblegoldinvestments.com. That's noblegoldinvestments.com.